and it is here for a really quick live update. As I mentioned in my email yesterday, I'm going to get back to doing these things on a daily basis, so you'll have an opportunity to kind of just see what I'm looking at, what I'm thinking about, what I'm potentially trading here. Purpose of this, obviously I don't charge for it, it's just to let you know and kind of prove to you that simple trading strategies can work. A very simple strategy can be found in the members area on the Make Money From Your Laptop website. So if you haven't registered for that, go online, register, become a member, it's free. Check out the really quick video on breakout trading. I'll go into some more depth about why these things work, but that video gives you I think a pretty clear understanding of why simple strategies work and why a simple breakout strategy can work. Obviously you're not going to win every trade. It's impossible. It's not something that can happen. But using mathematical probabilities, using money management that has good math behind it, you can be a successful trader as long as you're consistent in your application, as long as you're not over trading, as long as you're not doing all the things that we kind of fall into, those traps that we often fall into. So anyway, with that said, well, darn it, I was going to say let's pop over here and have a look at the market, but I did not bring up my my other screens. Let me get those going for you here real quick, and we'll have a look at what's going on. So what we're going to do is we'll look real quickly at the Forex market, and then we'll head over and look at the futures market. So just adding in the cameras here. Alright, let's have a look at this screen. So this is TradingView that I have up. I had an indicator coded for this that shows me currency strength for the 8 major currencies. So what we're able to do is we're able to look here and see over the period. This is based on an M5 chart. Over this period since really beginning of the new trading day, we're able to see how the currencies have been performing against one another. And it's just simply showing us currency strength. It takes all of the information from all of the various pairings, splits that, looks at where we've gained, where we've lost. It splits it down and comes up with a strength number that's assigned to each of the currencies. Has it gained, or has it overall as that single currency? When we split out the data from all the pairs, has that single currency gained against the other currencies, or has it weakened against the other currencies? And that's what we're seeing here for currency strength. Ultimately, what we're looking at here is this hard right edge, and we're just trying to find out which currencies are actually moving. Remember yesterday when we came in and we looked at this, everything was kind of coming to the midpoint. It was converging. Convergence tells us that we're getting into a period where we're not going to see a lot of movement. When there's not a lot of movement, we don't have an opportunity necessarily to make trades that could potentially move in a way that would allow us to make money. In order to make money in trading, we need to have some volatility. We need to have some movement. This allows us to see which currencies are moving, because obviously with currency pairs, we could go currency by currency by currency and look at all of the various pairs, but it's not going to tell us too much. If we're just looking at a single pairing, we don't know. We were able to see the chart data on it, but we don't know how active it's going to be for now or for the rest of the day or anything. And we still don't know how active something's going to be in the future, by the way. We have no way of predicting the future. But what we can do is make some assumptions based on current data as well as some historical data, right? So we're able to look at this information and say, okay, well, which currencies are moving? And this is showing me that we've got, the yen is certainly moving to strength, as well as the USD. My cat just came in to greet me this morning. So the yen and the USD are both moving to strength so far. In fact, they're the most active currencies to the strong side. Here for the weaker side, we've got the Aussie and the pound are both showing some momentum as well. They're weakening, especially here over the past hour. they've really been showing quite a bit of movement. So what we can do is we can use this information to say, hey, which currencies do we want to maybe look at on a chart and see which ones we might be comfortable with trading. For instance, here you've got the dollar, you've got the New Zealand, the Aussie, and the pound all here that are significantly below the midpoint. So maybe you look at the dollar versus the New Zealand, and you can bring up a chart like that, which I have over here. I just brought up the dollar New Zealand just a moment ago, and I have a look at this. Well, it typically has a range of only about 40 pips. Today it's moved 47 pips on the average of about 40 pips. If you look at the last 5 days, it's a 48 pip range. If you look at the last 30 days, it's about a 41.5 pip range. So, okay, I look at that and I say, well, pound New Zealand, that's not a great pairing. It looks good here from a divergence standpoint, but is there really opportunity in there? I mean, could it move further? Yeah, oh, absolutely. Just because it's got a range that's typically about 40 to 50 pips, let's say, doesn't mean that it couldn't have a day where it moves 200. But how likely is it, right? So we look at that and we go, okay, well, this has moved 47 pips on, against the average. How likely is that to continue? Not a lot of potential there. So what else could we have a look at? And then we can go back and we can have a look at the chart again, and we can say, okay, well, we've got the yen pushing to strength. How does the yen versus the pound look? Both are on opposite ends of the spectrum here. What's that looking like? Do we have opportunity there? So we can bring up the pound yen chart, and have a look and see what that's doing. Well, it's kind of consolidated here over the last little bit if we look at an M15, but let's even drill down to an M5. It's kind of consolidated a little bit here, but there may be some opportunity. We can see how it's been moving. The range is today it's moved 122 pips. Average is anywhere from 170 to, on a 5-day range, which is taking into account some of these really big days. 30-day range is about 130. So there might be some room in the tank for this to move a little bit more. So that could be something we might want to keep our eye on. We'll see. What else is out there? We've got the yen. We can see here on the very short term, if we scroll down to an M1, I'll give that just a second to refresh. Here in the very short term, there might even be opportunity there. Euro versus the yen. What's that look like? If we pop over and have a euro yen look, we can see the euro yen has moved about 48 pips. Average, if we look at the last 15 days, it's about 70. Last 30 days, it's about 65. Maybe some opportunity there if we look very short term on that euro versus the yen. So ultimately, what we're able to do is we're able to use an indicator like this that measures currency strength to see where are the active currencies. Obviously trying to sort through this big bulk of currencies and find the most active ones can be tough. So there's ways to split that down using some market data to see, okay, where could we potentially be operating? Then that allows us to drill down to the more active currencies, put that as a pair, and then trade that pair. So what I'd be looking for here is divergence. We'd be looking for a currency that's moving, to the stronger side, and pair that against something that's got momentum to the weaker side. So that's right now, as far as there being a trade, I don't have one that I'm putting on at this exact moment, but I will keep my eye on this through the day and see if we have opportunity there, with a stronger currency to pair against one of these weaker ones that we just had a look at. Moving on over here, we'll have a look at what the futures market's doing. Let's have a look at the E-minis. We'll take this off because that doesn't have any bearing on what we're doing here. Let's go back out to a 4-hour. Remember, again, for me, now E-minis is going to trade differently than we would with Forex. Forex is an entirely different market. Forex trades as a utilitarian market. The bulk, the lion's share of the trading there is simply money exchanges. When we get into the currency market, get into the stock market, those are very speculative markets. They exist for speculation. and they are traded a little bit differently. When I look at for instance here the E-mini futures, I'm trading this based on support and resistance and breaking of certain areas and looking at current market trends. Yesterday in the morning, we talked about this, the fact that this 3210 to 3215 area had been held up really well. We'd be looking to buy on pullbacks, and because the market trend is up. I know a lot of us feel like, how much further can it possibly go? And we have that feeling of it's going to reverse at some point, and it will reverse at some point, but who knows when. Trade with the trend. You can be contrarian, like I said yesterday. You can certainly be contrarian, but be prepared to be wrong. When you are right, it could be a very good day, because typically, the markets are going to fall much faster than they rise. But with that said, simple trading strategies: look at the current trend, trade with the trend. So that served very well yesterday. Looking at, we were in this red bar as we were having our market commentary yesterday. U.S. session got fully underway here. We can see it pulled back right to that 32.15 area, and then pushed on up. Would you have been in it for that long? No. You might have been looking for it just to simply cover this gap here, to the 32.30, 32.35 range. It continued significantly beyond that, but that would depend on how you're managing your trade once you're in it. Right now, for this morning, we've been seeing the price pull back quite a bit. We've got a key area here at this 32.40 right now, and we seem to be pulling back to that. For me personally, I'd rather see it come back a little bit more to this 32.30 area and buy off of there as a bottom edge. Again, trend is currently up. This is the 4-hour chart. Trend is currently up. And this is covered. I'm pretty sure I've covered it here in Facebook a number of times. What I'm looking at here on futures is I go to the 4-hour and I'll put my support resistance areas in, and then I'll drill down to a 30-minute to make my actual trading decisions. Right. So we'll trade it on an M30. Again, the trend is still in the positive direction. The trend is up. So I'm looking pullbacks to be able to buy into that and see where we're going from there. There are a couple of things going this week that could throw a wrench into the works. Pull up a news calendar, make sure you know what's happening through the day. This week we do have ADP non-farm employment. This is the precursor to non-farm payroll. So that happens on Wednesday at 8:30. And then on Friday, we have the actual non-farm payroll report. Those can be very impactful to the marketplace. Want to pay attention to what's going on there and trade with it. Whether you're trading futures or trading Forex, trading anything else, news can create volatility, which is really exciting. A lot of excitement on the charts. It can get us into a situation where we want to try to guess where the market's going. Again, don't try to predict. It is what it is. But this is one of those situations where we can go a lot of different ways with it. But I'm going to try to just keep it as basic as possible. For me personally, trying to read the news, interpret the news, and then predict where the market's going to go based on the news is futile. I became a lot less stressed about the markets when I stopped looking at the news results and letting that form a bias as to what I think should happen. You, me, the talking heads on TV, nobody knows where the market's going to go. Half the time we're going to be right, half the time we're going to be wrong. Just fact of life. And you go, Brian, but what about the systems that blah, blah, blah? Okay, great. We're not talking about that right now. The reality is, if you click the button, the trade's either going to win or it's going to lose. There's a 50-50 outcome of what's going to happen from the time you push that button. Same with news. We don't know. You can have the most positive news in the world. It should have a positive impact on the currency or on a marketplace, and the market goes entirely the other direction. It has to do with where market makers are accumulating, buying, selling, what their path is for the day. Don't try to predict it. Just have your plan, whatever plan that might be. Again, I'm showing you some very basic stuff with support and resistance. Have your plan, trade your plan. Be aware of what's happening in the marketplace. I mean, you can't be totally in a box and block out the rest of the world. But try to, and it's human nature, right? But try to not let your biases form what you think should happen and then trade based on what you think should be happening. It's a very quick downward slope that can occur when you do that. So plan your trade your plan, be aware of when the news is occurring, let the news happen, and then trade after the reaction to the news has taken place and the markets are returning to normal, right? A good case in point over here is Friday. Let me go back to this. Let's go back over here. This is the E-mini again. Looking over here, this is the daily, right? We had a major reaction to some political events that occurred late last week. The news reacted to it. We actually saw the market gap down, on reaction to that. Pushed way down, gap down again. But then, as the market's kind of returning to normal, we're seeing price moving again back into the pattern of where it's been, that longer term pattern. So, just keep that in mind. I don't want to go too long. I've already gone 15 minutes. But that's without getting on like a big soapbox about it and doing too much stuff in depth for just quote daily update. Keep that in mind. Just keep that in mind. Trade your plan or plan your trade your plan. Take trades that are with the trend until the trend changes. Feel free to be contrarian, but be aware when you're contrarian, you are going to be wrong. So be prepared to cut that trade quickly, and take that hit and move on. For me personally, have areas here I like to trade from, trading with the trend, wait for that pullback, and then trade from there. All right, so that's it for now. I'll recap as we need to. We'll be back in the morning and we'll talk more about that. So you guys have a great day, and we'll talk to you soon.